Well, hello traders and investors. I'm Elliot Little and this is your weekly neoclassical TA wrap. We take a look at these markets. We're doing it from a neoclassical perspective. That means each time we're asking ourselves what happened last week. What might it tell us about the coming ones? I do a show every Sunday evening broadcast at or before 10 o'clock Eastern Time, archived on YouTube, son of a channel, LA Little. If you want to subscribe and you haven't to, just reach up in the right hand corner, do so. Anytime I push content, you'll get a notification. As far as last week, markets, I don't have the data here for you on hand tonight, but the markets were up about 1% on the S&P, the NASDAQ, the NDX. Russell was up quite a bit more. Year to date, you're up in the 5-6% range now. The small caps, Russell's up over 11%. So you've seen a big push to the upside. And we've talked about it. Let's go to the charts and look at it. And that is that we have the S&P now having pushed over, even though it got back into it on Friday, pushing over that key area that we've been watching, which is right up here around that particular point. It was the top of the breakdown bar, but more importantly, it was the bearish retest regenerate of the lowest of the swing point lows. So you went up into that one. The next one is up here. That's what it started attacking on Friday. It gives some back. That's to be expected. That's not uncommon to see that kind of action when you have multiple layered bearish retest regen zones. And so that's the S&P. Now that's the weaker of the group. Let's look at the weekly on that same chart. And you can see you get under, back over, and you're pushing back up towards the top. Now, if you're looking at a weekly, your breakdown bar is here. That's the last area to scale on the way back up. And finally, if we look at it on a monthly basis, we look at it here. You know, this looks like just a little bitty blip compared to what you see on the daily charts. The power higher a week ago was the NDX. This past week, the NDX breaks out. This is the daily chart. Here's the past week's trades right there. If you look at what they did, is they got over these 3 swing point highs. As they come back now, that's going to be a bullish retest and an attempt to regenerate to the top side. And that's where we make measurements. That's where we get our ideas about what can and can't happen. Weekly chart, very positive, comes into the swing point high, does a bullish retest, and does regenerate to the top side. And you know, if you look at it just from a long-term perspective, you know, when you broke out over the swing point high, you broke it on multiple time frames. When you do that, what does that tell you? Well, more than likely, you're going to see 2 to 3 bars extension. So in other words, 2 to 3 months of extension to the top side. It was one of the reasons I was as adamant as I was about the fact that this market most likely was going to resolve to the upside, not to the downside. I've been saying that for quite a while. This is one of the main reasons I was saying that. Finally, if we move over to the Russell, nice big push up last week, right? Continuation, gets over to swing point high, doing a bullish retest regen on that time frame. You can see it test at the highs. It's a test failure at the highs, leading to the pullback that we're seeing take place. If we go on the monthly, what are you doing? You're going after the highs. 1296, got as high as 1263, not that far away from the highs. Big, strong run all the way back up now since the beginning of the year. And even on this time frame, right, if you want to see how bullish things are, on this time frame, the Russell has yet to even put in a B point on an ABCD structure on the long-term time frame. That could very well lead us to a much stronger move before this is all over. If we look, you know, around the world, you're getting the same sort of thing happening elsewhere. It's not just isolated to here. And so, you know, in other words, if we go to Europe, we'll go to the Swiss market because I actually like the way the Swiss market is showing us things compared to everywhere else. Swiss market, if we go here, held in that higher range, right? Trying to get over, let me just draw it out, trying to get over this swing point high. So it's consolidating in this higher range, wants to try and push higher. This is where it has to get over to really get the clearance. If it does, the next area of congestion is way up there. And so we're seeing Switzerland tell us positive things. If we look elsewhere, if we look at, say, the German DAX, pull it. Well, actually, let's do this first while we're here. The DAX came into the bottom, couldn't hold that region, right? This big wide price spread bar. But as it came back, right, gathered itself back over it. Now what's it going to do? It's going to try to get over that same sort of region that's up there. If it does, what is it going to do? Well, it's going to go after new highs. Pull it back here, you can see it's a bullish retest regen on these swing point highs. Now it's regenerating, or at least attempting to regenerate to the top side. If it gets over it, you can start picking out points of interest of where the targets will be. And that's how you do the neoclassical dance, as these markets dance for you. Swing points, anchor bars, swing points, wide price spread, and high volume are what we're always focused on. Here's the composite of the China exchange. Big push up, does something it shouldn't do, right? And that is it gets underneath the bullish retest regen. Should have held that. It was more than 6 bars. Gets deep into it, gets the bounce just like you would expect. But when you come deep into something, a lot of times you're going to come right back there and try to do it again. That's what it did. Now it's broken down. Now it's back into this big bar on the daily. Not all is lost. If you look on the weekly, you're still doing a bullish retest regenerate on there. If it can hold that area, then we could see the next move to the upside. But that's still a question to be answered and something we have to continue to monitor. Over on the Nikkei, we got a bad quote here we need to get rid of, but on the Nikkei you had a big push up and then a little doji. If you come here on the weekly, this thing's still gyrating towards the bottoms. A lot of that is due to the yen, and that's one of the big questions, is what is the yen going to do? And one of the things you have to monitor. Overall, markets look pretty good. You're coming into the presidential debate tomorrow. You're coming into earnings season here domestically. I'm talking about overseas. You've still got all the banking issues. There's a world of problems out there. But what does the market keep doing? As long as the central bankers remain behind these markets, and they do, and as long as the market doesn't call their bluff, which it so far hasn't, right? In other words, it keeps believing in them, then these markets are going to keep working higher. There's nothing to stop them. And the breadth of the market from the neoclassical perspective, then that is how many trends are trending higher versus lower. It's still a very positive number. So I can't get negative on this market as a result of that. I had one follow-up question on from one of the visitors or viewers of the site. Had to do with a stock that was already asked about. And let me pop it back up, take a quick look at it again. And the question was, is this going to continue up? Now, we were looking at it on an intermediate term time frame. On the intermediate term time frame, it looks like it's just getting over the swing point high or about to. That looks to be the breakout place if it can. It's going to have the volume if it does it. And so, you know, I warned last time that you want to give it a chance to get over the swing point high. I still feel the same, and the reason for it is this is the little congruent area here, right? If you can get over that, you can go attack these highs. If you want to get out in front of it, yeah, you can make your buy. You know, but do realize, as I believe I said last time, you already have an ABCD structure that has completed. That usually gives you some sort of a pullback. What you'd really like to do is catch this a little bit lower. Even if it breaks out this week and just can't go anywhere, you'd like to see it come back and do the bullish retest regenerate, catch it somewhere in this area and get the next ABCD structure to the top side. You're trying to give the market, give it a chance to give you the best entry. Buying breakouts typically is not the best entry. There's exceptions, but they're very few and far between. So, you know, my thought here is what it was the last time I talked about it, and that is that just be patient. You're probably going to get a better entry. And if you don't, then you catch the retrace and buy that. Folks, that's it for tonight. Have yourself a great one. I'll see you next time. Good night.